Maintaining a statistical edge in the market is possible if you, as a day trader or a swing trader, have a narrow focus and become an expert, not in many things, but in a few. So rather than trading everything and having 5 or 6 different systems, you'll be much more successful becoming an expert in 1 or 2 strategies and trading 2 or 3 different commodities, particularly those within a particular market. The 2 systems in which we specialize in: number 1, pivot point continuation. Okay. We'll talk about that in a moment here. And that's what you're looking at upon the screen. Okay. Okay. Predefined support, resistance levels, bounces, continuation, utilizing trends. Okay. Pivot point continuation, number 1. Number 2, mean reversion. Okay. High win rate, but slightly less profitable. Okay. So pivot point system, pivot point continuation. The beautiful thing about pivot point continuation is that with even a 45% win rate, even some instances as much as 42% win rate, you can be very profitable. Why? Because pivot point continuation system allows you to have tight stops, and I don't want to call them loose target prices, but your risk reward is very favorable, okay, in a pivot point continuation system. On average, 1 to 2.5, 1 to 2, 1 to 3 is not uncommon at all, okay, in terms of risk reward. So a few things I look for in every trade, things that must be true in order for me to open a position. Okay. Number 1, the first step is identifying the trend. Okay. Which is what we did here with this trade of EUR-JPY. Okay. And we traded today about 12:15, about an hour or so before this large bullish rally. We didn't actually ride this out all the way up to R1 in this case, because of the stagnation that I saw here with this large amount of buying pressure. I would have expected it to break out again up and hit pivot, but because we hesitated, I went ahead and liquidated the majority of the position. But you will see why here in a moment, why I left a small position open still to this moment, to reach basically the sky, so to speak, or reach the next profit target price, which would be this pivot point. And I'll show you guys that in a minute. So multiple time frame confirmation. Okay. Multi-time frame confirmation. So again, establishing trend, not looking narrow, not looking at just the one time frame. Okay. We're looking for confirmation on multiple charts. But when it comes to identifying the trend, the rule of thumb is obviously looking at, of course, the 50 EMA and the 200. With the 50 being above the 200, the trend is obviously bullish. Okay. And you can actually back this out a bit to see over time, this trend has been pretty stable, okay, bouncing between predetermined support and resistance levels. In most cases, bouncing off of the 50 and then continuing on its path, usually up to R1, okay? So again, this helps us to identify trend, and as they say, the trend is your friend. We don't trade, at least in a pivot point continuation system, we're not trading against the trend, okay? We're trading with the trend. So from there we go and we take a look, of course, at the hour, okay? And we're looking at the hour to determine, of course, a suitable stop loss position and also a potential point of entry. So what I'd like to do is utilize, in this case, S1 as a support level to help narrow down and identify not only my stop loss, but it also helped me to determine if I want to get into this trade and if I have an opportunity to get in at a good point. Meaning, I don't want to, even though my theory and the going theory is, of course, that we're going to reach this next pivot point, and that would be a target price. We don't want to get in at a weird spot. We don't want to, our entry price, we don't want it to be in the middle between 2 pivot points, because it really knocks down our risk reward ratio. Okay. And it more evens it out. What we need, what is required, and I won't get into a trade unless we can catch it at or near a significant support or resistance level. That is how we establish our 1 to 2 or 1 to 2.5 or 1 to 3 risk reward ratio. So in this case, as you can see, the blue line being our stop loss, this allows us to get in at or near this support level with the target being this next pivot point. Now, as I mentioned earlier, now again, this is confirmation on the hour, okay? This helps us to identify, again, a stop loss price. Now, zooming in even closer to the 15 for the same day, of course. Uh, this is where I decided, and I knew at this point that I had a good position, because here I can utilize this S1 as a good exit price, knowing that my target price would actually be this R1 position way up here. Now, as I mentioned earlier, this 12:15 candlestick is when we entered this position about an hour or so before, or actually a few hours before this long bullish rally. But you can see the trend was already correcting and moving itself back up in the direction in which it would ultimately go. And again, because I saw the stagnation, we went ahead and liquidated. But the thing I love about this setup, um, I really appreciate about this particular setup, is looking at the day, you can see that there's still a lot of room to grow in this position. Okay. There's room to take this all the way back up to R1. So again, the idea is, of course, to scale in and scale out of positions. Okay. This allows us to make these moves and still and basically maximize our profit by scaling in and scaling out. Now, there's a few caveats to this system. But before I get to that, I want to talk to you guys about the other thing that we do uh, before we place a trade, and that is look for a statistical edge. I need and I want to see a statistical edge. What do I mean by that? Well, Breakout software, this takes us, of course, to Breakout software. Breakout software has an awesome feature that allows users to basically check analytics, okay? Basically, performance over time, okay? As you guys can see here, looking at the analytics dashboard, okay? We can basically check the analytics, the performance over a given period of time, 1 day, 7 days, 30 days, or even 90 days. We can basically look at analytics and performance across specific strategies. So in this case, we're looking at Breakout. Now, we might, in certain instances, want to see the performance across all strategies, or looking at just mean reversion. We can also filter on various time frames. And then also, we can filter by various markets, whether you want to look at this on Forex, metals, energy, or indexes. Okay. And we're looking for, again, a statistical edge. Okay, so we want to see if the commodity that we're interested in trading, is basically in our top 10 in terms of statistical edges. Knowing, as we talked about earlier, that you don't have to have a 70, 80% win rate to be very profitable, particularly when you're doing breakout continuation strategies. You're really looking for, again, just an edge. This is what we look to establish with breakout software, is an edge. Okay, so again, when all of these things align, when the stars align, we go about looking to enter into a trade. Now, let's talk about uh, position size. Okay, this is very important. So when we talk about position size and how, because again, we have to have this down to a science. There's no guesswork here. Everything, the stars must align on all accords. Okay, so how do we go about calculating position size? Because as we mentioned earlier, risk management is crucial. It's actually mandatory, okay, for opening trades. And so how we do this is we measure position size on the basis of your account size. So let's say you have, for lack of better, for all intents and purposes, let's say you have $100,000 in your account, okay, and a good risk, uh, you know, percent per trade would be 0.5%, or you might even some instances go 1%, or if you're very confident on a position, you might go slightly higher depending on the move. So that 1% is calculated based on your stop loss. Okay. So the number of pips that is between your entry price and your stop loss, or your stop price, okay, helps you to determine, can be converted basically to a dollar amount, or in some instances to a percentage. But really what we're looking for is a particular dollar amount, and we want to calculate pip size not based, again, on the target that we're going to, okay, but more so on the amount that we would lose in the event that we get stopped out. Okay, that is where our 1% risk is. So let's say you want to do 1% on 100K. That basically would be, again, your $1,000 stop. Well, again, as we talked about, we're looking at a 1 to 2 to 1 to 3 reward. So if we're saying that we would lose 1K from a good entry price to a stop, the reward of reaching our target would, in this case, probably be about 4x. But we're fine with getting even halfway there. We're fine with getting, in this case, what I did was uh, get to this 50 EMA. Okay, we still 2x our actual risk by reaching even that mark, as you can see here. Okay, so this is again the trading strategy, and this is why I love pivot point continuation as a strategy so much, because it works. Okay, and you don't have to have an extremely high win rate. Okay, so again, just want to go over today's, of course, today's trade of the day. If you guys are not a part of the Discord group, be sure to join. Okay, there we basically drop some of these higher quality plays for free. There's no cost to join the Discord. We also go into trader education, trading psychology, all the things that are required to be a consistently profitable trade. We're basically giving you guys that absolutely for free. The key is, and the point is to basically build this community, right? Where we hold each other accountable as traders. We grow together, we learn together, we toss ideas off of each other's heads, right? In no way, shape, or form do I believe I'm like the master of all trades. No, I'm a student, and being a student and being hungry as one is what has allowed me to basically go from, where I was when I first started as a trader to where I am today. So it's definitely important for people to basically, stay hungry as a student, to learn, and to sharpen their tools, and to be in community with those who are doing the things that you want to do. Very important. So you guys can do that in the Discord group absolutely for free. Okay. So, of course, if you got value out of this video, if you enjoyed the content, be sure to give it a like, share, and subscribe, of course, to stay connected, of course, to this community. All right. Till we chat again, I'm out of here.